The stock market is supposed to be a fair game, a level playing field where opportunities are abundant and accessible to all. It's designed to be a place where hard work and smart decisions lead to success. Where everyone has a shot, whether you're a billionaire sitting in a high-rise office or just starting out with a small investment and big dreams. But when a few powerful players rig the system, manipulating the rules for their own gain, it's no longer a market. It's a magic show, a carefully orchestrated illusion, and you're not the magician. You're just an audience member being deceived. Manipulation destroys trust, the very foundation upon which the market is built, turning your investment from a calculated risk based on research and analysis into a gamble against hidden con artists, where the odds are stacked against you. That's why we investigated Asia Broadband, or AABB, a company that caught our attention. On June 24, 2025, we wanted to understand the forces at play. We tracked every buy and sell order second by second, meticulously documenting the market's activity to uncover what was really happening beneath the surface, beyond the headlines and the hype. This isn't about wild conspiracy theories, this is about uncovering the truth. It's about hard data, facts, and evidence that paint a clear picture. By analyzing the order book, the record of all buy and sell orders, we saw patterns that revealed blatant manipulation, actions designed to mislead and deceive. It's like piecing together a puzzle, a complex investigation requiring careful attention to detail, where some pieces are invisible, hidden from plain sight. But the final picture is clear. The game was rigged, the system was compromised, and that affects every single investor, from the largest institutions to the smallest retail traders. The world of finance can be a complex and sometimes treacherous landscape. How do market manipulators, those who seek to distort and profit from the system, pull off their tricks? What are the tools they use to deceive and mislead? One favorite tactic, and a particularly insidious one, is spoofing. This involves placing huge fake orders, creating the illusion of significant demand or supply, to fool other market participants into moving the price in a desired direction. The spoofer, having created this false impression, cancels the order at the last second, before it can actually be executed. They then profit handsomely from the artificial and often fleeting price move that they engineered. Another trick in the manipulator's playbook is painting the tape. This involves traders colluding to buy and sell shares among themselves, often at escalating prices. The goal is to create the appearance of high trading volume and upward momentum, to create fake volume and lure in real unsuspecting investors. Once enough people jump in, driven by the fear of missing out, the manipulators, having achieved their objective, unceremoniously dump their shares, taking their profits. This leaves others, the latecomers to the party, holding the bag and suffering significant losses. These tactics are effective because they prey on basic human psychology, exploiting our inherent biases and emotional responses. They are designed to make the market look active, healthy, and strong, enticing investors to participate. But in reality, it's often all smoke and mirrors, a carefully constructed illusion. Financial regulators, recognizing the harm these practices inflict, have outlawed these manipulative moves. Despite the regulations and increased scrutiny, these tactics, unfortunately, still happen, often in the shadows. The result of these manipulations? Regular everyday investors, the backbone of the market, often get played and suffer the consequences. Let's take a closer look at June 24th. This particular day offers a stark illustration of some concerning market behaviors. AABB's trading activity on this day wasn't just volatile. It was a textbook case of manipulation, showcasing tactics that undermine fair market practices. One of the most obvious signs was the appearance of massive buy orders. These large bids would suddenly appear, creating a false sense of strong support and artificially inflating the stock's perceived value, only to vanish just as quickly, leaving investors wondering what had happened. This wasn't random market fluctuation, it was a deliberate and carefully orchestrated pattern of phantom bids, strategically designed to prop up the price and lure in unsuspecting buyers. Meanwhile, on the sell side, small sell orders were strategically stacked up to create fake resistance levels, effectively trapping the stock in a tight, predictable trading range. During this period, major market makers, including firms like Citadel Securities and Virtu Americas, exhibited unusually high levels of activity, raising questions about their roles in these market dynamics. They were rapidly placing and then canceling orders in a manner that appeared suspiciously coordinated and synchronized. The trading patterns observed looked less like genuine competition and more like a carefully choreographed dance. raising concerns about collusion. The ultimate goal of these tactics? To control the price, frustrate real investors who are trying to make informed decisions, and ultimately to profit handsomely from the resulting confusion and volatility. For everyday investors who are simply trying to build a secure financial future, this means that your investment decisions aren't solely based on the company's actual performance or its long-term prospects. Instead, your investment's fate is at the mercy of sophisticated manipulators. The real and lasting damage is to the fundamental principles of trust and fairness that underpin a healthy market. And that erosion of trust is a problem for everyone involved, from individual investors to the overall stability of the financial system. Every time a stock is manipulated, regular people lose retirees, new investors, anyone who believes in a fair market. These tactics don't just steal money, they erode confidence and participation. Companies suffer too, as suppressed stock prices make it harder to grow and hire. That's why exposing manipulation matters. Regulators like the SEC and FINRA can't catch everything. They rely on vigilant investors and whistleblowers. Reporting and documenting these schemes protects the integrity of the market. The fight for fairness never ends, but shining a light on these tricks is the first step. Let's keep watching, keep reporting, and demand accountability so everyone gets a fair shot.